So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here, 25th of October, 2020. No trade calls, no recommendations, or response for their own stuff because we're here for educational purpose only. So, what's happening going into this week? So, basically, we've got a lot of data on deck, but predominantly it's going to be about the central banks. On Wednesday, we've got BOC, so Bank of Canada, with a rate statement and a press conference. On Thursday, we have BOJ, right, with a press conference too. And we also have the ECB with a press conference, rate and press conference on Thursday. And then Friday, we've got GDP out of Canada, Chicago PMIs. But really, the focus is going to be on the headline risk and what we get out of Brexit, what we get out of the election in the US, what we get out of this Hunter Biden, what do we get out of this fiscal stimulus with Pelosi. All things being equal, you never know, but all things being equal, with us being a week away or the week before the election, it wouldn't really make sense for any of the central banks to do anything big or do anything crazy ahead of the election. So you'd expect them to want to keep any powder dry. Now, as we talked about in terms of seasonal, what tends to happen in this week, right? We starting towards the back end of October, where a lot of people will be starting to look to buy also for that end year rally. A lot of people talk about the Halloween trade and they talk about buying the last 4 days. At least there's a big pop. There tends to be a good lift the last 4 days of October into the first 3 days of November. Now, stats on that will say, like, you'll hear people talk about S&P, Dow, Russell, everything up around 75 to 85% in that for last 4 days in October and the 3 days in November. And usually people talk about 2%, 2 to 3% gains in that period. So a lot of people will be focused on that. But I'd be a little bit cautious in general with those things because especially on election years, it could really be, double that 2% mark or be actually negative because of the election. So you have to be a little bit careful with those stats. So I always prefer to just focus on the levels. The other main thing that's going to be on deck this week is really basically just earnings, right? And the day which matters, the only day that matters is Thursday after the close, because we have Apple, we have Amazon, we have Facebook, we have Twitter, we have Alphabet, so Google, right? So all the FANG names are going to report, and that's really going to be the focus. So I think everybody will be coming into this week thinking with a slightly bullish bias, and the only thing that can kind of break that is the earnings, right? That could bring some kind of reminder. Now, the other thing to keep an eye out for is is there any sustained break outside of the ranges? Because again, you can look at this whatever way you want, but look at here. So we've got Swissy. It's at a key level, key low for the dollar, but it hasn't gone anywhere for a long time. Look at yen here. We're at a key level, but still hasn't gone anywhere for a long time. Look at CAD, key level, has it. And what is this? This is all dollar weakness. How does that translate on the opposite side? We'll look at Aussie pressing those highs, Kiwi pressing those highs, Aussie towards those highs, Euro towards those highs, cable even in the midst of that in those highs, right? So that's what's going on. It's all really a dollar trade. And what you want to watch here is as the dollars come back down here, trading a little bit heavy, how we trade in relation to that 50 back. Normally, we would have expected this to stay a little bit more bid, but it's just, there's just been no continued selling as those equities have stayed bid. And again, it's similar like if you're looking at the yen or the Swissy, it's in this big support zone, but it's staying heavy. Watch the 50 DMA as a bull bear line, but again, assumption would probably be that we still see a lot of choppy action. And if you see on the equities, they're still stuck. You can also see, if you're talking about a holding pattern, is look at NKD. So you see the Nikkei, it's going nowhere at all. Look at FDAX, so Germany, even though things have been a little bit heavy in Germany, COVID situation in Europe, essentially we're still stuck inside that holding pattern. Now, what we've seen is what we expected is watch out. We said, look at what's going out on Netflix, right? We discussed that this could be basically first signs of weakness as we've seen in the past. And bam, just like clockwork, we've seen Netflix once again ahead of earnings heavy. If you look at Intel again, Intel's been struggling a lot, and this is not something we expect to change. As you know, also the announcements from Apple, etc., and the competition is just really, they just kind of let everybody pass by. And this is a very heavy, very ugly chart for Intel, and in general for all the semis. It's not looking super hot. You could see here how on the daily, right, these are leaking. So those tech earnings are going to be very, very important going into the week. And nothing much has changed in terms of levels. So if you're looking at the ES, where's the ES hovering? It's hovering at those highs, right? The 50 is holding at this 3,500 pivotal is holding. So we're stuck inside this range. So right here, you're seeing people buying the 34s and selling the 35s and just kind of holding it inside this pattern as we get closer into the election. Unless you get a tape bomb, you would expect it to broadly stay inside that range. Similar on NASDAQ, we said sell, failure to hold above 12,000, and that 50-day is getting bought, and we're kind of stuck in this holding pattern. Now, what happens? I would suspect it takes something huge to break higher. So on a break higher above that 12,000 on the NASDAQ, you'd have to assume it's going to try and go towards that all-time highs. If something ugly happens, you'd expect that 100-day to come into play very, very quickly. And that's exactly the same thing as if you're looking at the ES, right? If you get a positive news and we trade back above on a closing basis above that 3,500, you'd expect it to want to take a stab at all-time highs. If something a little bit iffy happens, like a tape bomb, then you'd expect this to come quick into the 100 DMA. And for now, you can't really, of course, you can look at 200 to the downside, but you really wouldn't be expanding, looking too much further out, because it's we're going into this election and you're likely going to see a lot of wheeling and dealing. And with less liquidity, of course, any headline can move this. But if you had to be a betting man or a betting woman, you'd expect these to stay broadly in range. And even if we get traction, you would not expect all-time highs to get taken out, and you would not expect these recent lows to get taken out ahead of the election. Into the election, anything goes, but that's the chop game. And that's highlighted very, you can see that if you're just looking at these dailies, and I've just zoomed out, right? They're just kind of stuck in this holding pattern as we've been discussing. So it shouldn't be a surprise to everybody. And it's always important to have realistic expectations. Look at crude. And the expectation should be that, broadly speaking, we're going to stay range bound. We'll do another update if anything moves, but for now, that's where we are. You just have to be patient. Wishing everybody an awesome week ahead. Take care, guys. Bye-bye.